The juice is loose. We have some breaking data. If we get this close exactly where it is right now, today is the weekly close, but if it closes here, this could be huge for the market. We have seen this before, this exact situation with an exact indicator that we're going to point out in this video. Guys, this is huge. Nobody is talking about this. In fact, we just discovered this minutes before recording this webisode. And as well, Bitcoin fell and is currently finding support on this line that we have been talking about for weeks. Here's a clip from yesterday's video. To the downside as well, I think that the $89 to $9,000 area, actually about $8,700 to $8,900, so a $200 window would be a really good pullback area where we could get a nice retracement and then continue to the upside. The wick is pretty long because of the liquidations, which we'll get into in this episode. But specifically, if we fail to find support here, we'll talk about where the next target to the downside is. But if we hold support here, even the moon may not be a high enough target. And as well, we'll go over the main reasons why we dumped almost $2,000 last night very quickly. So much detail, so much to get into. Let's get learning. What's going on, everyone? Welcome back to an extremely important video. Last night was absolutely wild. I'm glad you guys were a part of it. But now we really have to go over in detail why that happened, because there are some few fundamental reasons. And did we just have the dump that everybody was anticipating? Is it already over, or is there more to come? It was a pretty significant dump. It was a big move, but we really need to get into detail, guys, because there is much more price action on the horizon. Things are only getting heated up with less than 2 days until the halving, less than 48 hours, guys. Things are getting wild, and we have a lot to talk about. So guys, before we get into the video, make sure to leave the smashers if you want to enter for this giveaway of this ledger. Hit the comments, hit the subscribes, the dings, the notifications, and tell your mother you love her because it is Mother's Day. Mad respect to all the mommies out there. Wow, so guys, we currently are finding support. This is our fourth 4-hour candle where we've been hovering above or slightly on this 6-year trend line. So this is really huge. If we're going to maintain a short-term uptrend, this is what we'd have to hold. But if the selling pressure does increase, there are some targets to the downside, which we can talk about. But guys, let's start off with this, because this is what everyone really came here for. This is absolutely wild. So currently we have 7 weekly candles, and our 8th weekly candle is now red. It was not the entire week, it was green up until last night's dump. Now we're forming something very interesting here. We've been talking about this MACD cross for a while now, and we've actually seen this pattern before. Now, I want to throw caution out there. This is more of a macro pattern. This is not something that could dictate the price tomorrow or 2 days from now. This is more of like a weekly indicator that'll indicate a lot, week by week. So a little bit longer of a moving indicator here, but it's very important nonetheless. So we're going to get the weekly close today. Okay, this candle is going to be cemented in history forever today. Now, this is what's interesting here. The last time we had 7 green weekly candles was back here before a massive rally. Now, look exactly what happened here as well. On the 8th candle, we had a red spinning top candle. And now if we get this close exactly, only a few hours left, if we actually get this close, with the price action where it is, or even slightly above what it currently is at, so roughly, let's say if it closes right around like the 9,000 or even anywhere between the $8,700 to $9,000 range, this will be what's known as a spinning top candle, where the wicks are about the same length and the middle is the body, and it's a very small body. So what that indicates is indecision in the market. Now, interestingly enough, there are a few things that we have to take a look at here. If you take a look back here to the summer of 2019, we had 7 green weekly candles, followed by a huge one, similar to this one. And then our 8th was a red spinning top candle, which we followed by a few more weeks of indecision, and then massive pumpage continued. So this is what we're seeing so far. What are the chances that maybe this is the same situation here? There needs to be more confirmations for this to be completely similar, so definitely be aware of that. But in addition to that, say this does close, say we get a few more weeks of consolidation, sideways trading, that could be a massive blast-off zone. But I want to point your attention to this as well. Currently, as we've been talking about for about a week now, we've had this MACD cross where the blue goes over this orange line here. Okay, now similarly, I circled it on this chart as well. As soon as we had that same indication here, it started a massive rally here where we went from, let's see here, it started, it crossed right around like 3 or 4K and went all the way up to 14K. And obviously this was a very bearish candle where you see the massive long wick to the upside and then a very small body at the bottom. And obviously that indicated a downtrend right there. Now we're seeing, not only do we have 7 green weekly candles and the 8th being a red spinning top. Exactly what we're seeing here, 7 green weekly candles with a red, potentially, we won't know until a few hours from now if it closes like this, a red spinning top candle, and the exact same indications on the MACD here, which is a cross right here, right at the beginning, which could lead up to a massive rally over the coming weeks. Now, again, this is not something that'll make the price pump within the next few days, okay? This is a little more long-term of an indicator, a little more long-term of a pattern, but it could be what we have in store for this Bitcoin market, guys. This is absolutely huge. Now, obviously, this potentially, if it does happen, because this just became reality last night with this pattern repeating. So nobody else knows about this because this just happened, okay? Nobody's had the time to really see this. So this is huge. Could this be what we're going to get? Okay, now we've had a little bit of a dump. Again, like everyone's been talking about for weeks, there's usually a dump. Is this the actual dump? And could we start to actually see some more organic price action or maybe even predictable price action with how the market's forming? And what I mean by that on the weekly, everything is predicting based on a lot of indicators that the market is really ramping up, okay? We're above so many key moving averages. We did have a rejection here at the 10K level, which is important to note. It's not the most bullish sign. We got a rejection here at this 2.5-year resistance line as well, which is on this chart a 2.5-year Fibonacci resistance, the golden pocket between the 0.65 and the 0.68. That's where we got rejected. So overall, in the short term, that's not a very bullish sign. I mean, obviously, that's not a bullish sign in the short term. But on these longer term time frames, this could end up being a massively bullish indicator. But ideally, what we'd want to see is not massive dumpage from here, but just more consolidation. So if we just had more time to consolidate and the price pretty much traded sideways for a few weeks, that could be insanely bullish for this market. Now, with that being said, we do want to hold along this line, guys. Again, there's only a few more hours before we get our close for the week, and we have this weekly candle cemented in history. If it closes exactly where it is right now, then I think that's incredibly bullish. But depending on where it closes is crucial. Again, like I said, as long as we remain above like 87, 8,800 US dollars for the close, and we don't go much above like $9,100 within the next few hours, then that could be insanely awesome. And I think it is important to note as well that we did bounce off of key levels, the 200-day moving average, which is also confluent with the 21-week moving average. So we got to bounce at a pretty expected area, but let's actually get into more detail about why Bitcoin dumped, okay? 3 reasons, guys. Absolutely, I recommend Joseph Young. He's the one who posted this article on Cointelegraph. His articles are always the top-notch articles that I find here. Now let's get learning. So Bitcoin price dropped almost $2,000 from $10,000 to almost $8,000, liquidating $200 million worth of longs. Now here are the 3 factors that triggered the fall. So Bitcoin's price dropped at that $2,000 in a very short amount of time, which is about 10% in a single hour. It obliterated the futures market with $200 million worth of longs getting liquidated. So the 3 key reasons are pretty obvious here. Strong multi-year resistance, which is that 2.5-year trend line that we talked about. Whales moving to short the market on BitMEX and extreme volatility into the halving. Okay, as whales started to sell at 9,900, okay, we're not breaching that resistance, which triggered this. So we were unable to break it. And guys, what that led to is almost, I mean, it's pretty expected, really, a cascade of long contract liquidations, primarily on BitMEX, and also it says Binance Futures here. In 1 hour, more than 200 million worth of longs getting liquidated. They started to fiercely short Bitcoin across major crypto exchanges here. Interest in the 4 big derivative exchanges, Binance Futures, BitMEX, Deribit, and OKX, plunged. The term open interest refers to the total amount of long and short contracts open at a given time. In other words, many traders, especially whales, betting against Bitcoin at a critical reversal point of a long-term trend triggered a sharp drop in a short-term period. So let's sum it up with this. Basically, if we zoom out here, you can see this massive long-term trend of a potential symmetrical triangle. You see it consolidating here, getting rejected right here, is what forced the market into basically going ahead and shorting this position here. I mean, if there's going to be a short in the market, this is one of the most expected places for it to be. So again, what happened last night is really not that unexpected at all. When many new investors enter the market in anticipation of a major event, it opens the market up for a steep sell-off. For instance, after the 2016 block reward halving, the Bitcoin price dropped by more than 30%. As traders reacted with a sell the news response. So it's different this time because the market is fundamentally different. There's just so much more going on with trading, exchanges, longing, shorting Bitcoin, which didn't exist back in 2016. So fundamentally it's different, but basically, I mean, the end result was the same. We've seen a massive dump, and it wasn't even that big of a dump really, but overall, I mean, this is pretty incredible. Really, the next big move, the next trajectory of the market in the short term, I think depends on holding this line. But guys, we really don't focus too much on day to day on this channel. It's more about like a longer term trends here. And overall, this what we pointed out about the weekly chart, the MACD cross similarities, the seven straight green and eighth red weekly spinning top candle could be absolutely massive for Bitcoin. So guys, awesome. Let me know what you think. Make sure if you haven't already, check out the links in the description if you're interested in getting T4, where you can learn a ton about TA, guys. All of the tips and tricks to wet your whistle, guys, check out the comments below. And if you made it this far, guys, you are eligible for this $40 off coupon code. And as well, we're now accepting Bitcoin as well. Huge. So guys, thanks so much for watching. Drop your comment below for this ledger and make sure to tell your mommy you love her today. It's Mother's Day.